The Bank of Canada hikes interest rates to 5%. Another 25 basis points have been done today. They continue their quantitative tightening, and they're doing this all into the backdrop of a potential depression. That's what the money supply is telling us. So let's get right into it and see what's going on here. Bank of Canada raises policy rate 25 basis points, continues quantitative tightening. The Bank of Canada today increased its target for the overnight rate to 5%, with the bank rate at 5.25% and the deposit rate at 5%. The bank is also continuing its policy of quantitative tightening. And then this is what the Bank of Canada said. They said global inflation is easing with lower energy prices and a declines in good price inflation. I will say though that even though we got lower energy prices, our energy prices are still really high. Gas prices are still really high. And we're getting all these carbon taxes that keep being implemented. So the price of gas is never going down to where it was before. So really interesting on that part. However, robust demand and tight labor markets are causing persistent inflationary pressures in services. Economic growth has been stronger than expected, especially in the United States, where consumer and business spending has been surprisingly resilient. After a surge in early 2023, China's economic growth is softening, with slowing exports and ongoing weakness in its property sector. Note that it said slowing exports there, because slowing exports because of the demand that is coming in for those exports. So that's something of note there. Something Jeff Snyder's been on about a lot. And then it says growth in the euro area is effectively stalled while the service sector continues to grow. Manufacturing is contracting. That's not good. Global financial conditions have tightened, with bond yields up in North America and Europe as major central banks signal further interest rate increases may be needed to combat inflation. So that's what's happening, and that's what the Bank of Canada is saying. Let's take a look here and see what the Canadian dollar is doing versus the US dollar. So you got the Canadian dollar is up right now. It's around 76 cents. I like it in this 76 area. I'll continue to buy US dollars in this 76 area. I think it's a good area to do it, because if you look at the long-term trend here, which is down, and where we are at right now, you can see that this is a nice little zone to buy in, because we're still below this trend line. It may come, it's inevitable that it's going to come down at some point, but it may have more room to run here. And the interesting thing is as well, when you look at the Canadian dollar versus gold, you can see that it's actually gold is up against the Canadian dollar over 0.5% today. So that's kind of interesting. And it's also an ominous sign, isn't it? Because the gold market in general is predicting, hey, something bad might be on the horizon here, because it's actually going up against the Canadian dollar. So it's going to be interesting to see how this unfolds, because usually though, gold will actually come down when the financial markets crash, because everybody rushes to sell whatever's liquid, and gold is really, really liquid. It's one of the most, if not the most, liquid instruments in the world. So Canada private debt to GDP, I want to quickly touch on this. We are at this insane level in private debt to GDP that has peaked, so that's a bad sign to start off with. But we're around this 270% mark right now. If you go back to when interest rates were at this level around 2005, 2006, you were between 180 and 200%. And now you're up like at 270%, and at one point you're at near 310%. And what this effectively means, what this chart is telling us, is essentially private businesses are in debt. And this is something seldomly talked about on the mainstream media and the financial media, is in fact that private businesses are holding on to a ton of debt. So if they're increasing interest rates and they keep increasing interest rates, that puts pressure on those private businesses to then go cut costs or increase prices. So if they can increase prices, they're obviously going to go ahead and do that, and then that continues to put price pressure on inflation. But eventually it's going to get to the point where they have to start laying people off, and we're already starting to see the unemployment rate rise, and other banks are actually coming out and calling it, and coming out with some pretty convincing charts, which we'll get into right now. So Canada's rising unemployment is a foolproof recession signal, says BMO. And this is one thing that I'll actually agree with BMO on. But if you look at their chart here, you've got the unemployment rate, which is the blue line, and then you've got the real GDP growth. And if you look at real GDP growth, it's far from amazing right now. And you can actually see that the unemployment rate is actually going up. It's starting to go up. So that is not a good sign. And you can see that every time it's done this, in fact, is actually during a recession. So we might even be in recession right now. We just don't know yet, because by the time they come out and tell us, we'll be looking at rear view mirror data, which will say, oh yeah, we were in a recession then. And that's even if they don't change the definition of recession. And you just have to think, nothing is changing right now, which will change this and the private debt situation in the future, and also the household debt situation in the future. So all those things are just worsening. And Canada is a credit-based economy. It's in a massive, massive credit bubble. It's not just home loans, it's auto loans, it's private business credit. It's so many different things, credit card debt, the list goes on and on and on, right? We know that government debt is another big one. So you've got all these debt bubbles that are going on, and then you've got the ability of the businesses and the households to actually pay back that credit just plummeting, just absolutely plummeting. And the thing that the central planners are doing is they're continuing to hike. So they're pushing the probability of default up every time that they do that, whether you disagree or agree with what they're doing. And then I wanted to show you this just to lighten the mood, essentially, which is if you go to the Bank of Canada's Google reviews, it's kind of funny because you get the emotional sort of herd mentality that comes out in these reviews that I find kind of funny in some of them, because a lot of these people have put themselves squarely in this situation. So this guy says, Bank of Canada is a private institution, so unfortunately the government has no say on raising interest rates. I mean, that is just so laughable given what happened during the pandemic. You know, obviously, government and the Bank of Canada, they are joined at the hip. They are joined at the hip. I mean, essentially, the Bank of Canada, if they make a loss, who do they go crying to? They go crying to the government to get the money. So, you know, it's the same with their profits. Where do their profits go? Their profits get turned over to the government. So saying the government has no influence over what goes on at the Bank of Canada is just utterly hilarious and shows how out of touch a lot of people are with really what's going on, which is kind of concerning. Please think of the middle class people and low economic class people and high taxpayers. Please stop further hikes. It is becoming too much for us. We are left with no spending power at this stage. And you know, just imagine, because you have to think, for the past decade now, we've had this low interest rate monetary policy that has happened. And now all of a sudden we go to a more normal rate historically, because if you're talking like the past 30, 40 years, we're at a more normal rate, even on the lower side of it, actually, if you really think about it. And these people are going, stop raising. And why are they doing that? It's because they took on too much debt. And we live in this zero responsibility society right now, which is that, you know, I can't do anything wrong. And if I do something wrong, it's somebody else's fault. It's the government's fault. It's the Bank of Canada's fault. Now, I get it. The government is to blame for most things, but you have some of your own responsibility that you have to take hold of as well. You know, if you're piling on the debt, if you're the one signing on all those mortgages, then you're the one as much to blame as the government, the bankers, and all the rest of it. So you share the ownership of your issues in equal weight. So it's kind of crazy that people come out and say stuff like this. And I think it's kind of scary and shows where we're heading, I think, in society, because this is the reality of what people think. You are killing us with these interest rates. We are working so freaking hard, and soon we won't be able to put food on our table. So yeah, it's kind of crazy. And look at the amount of likes people are getting on these reviews as well. So, you know, this just goes to show what people are on. And there's a 5-star review about the cafeteria there. But then if you go on, unelected officials making decisions for everyday Canadians. This is democracy at its finest. I guess when you're making over $400K a year, making your mortgage payments is a breeze. And obviously this person is getting at the fact that their mortgage payments have gone up so much. But again, who is really responsible for that? Did the Bank of Canada go to you and say, get in that variable rate mortgage? You could have got a 10-year fixed rate and you could have been paying 3.5% when the rates were at their lowest point. But you didn't want to do that, did you? You wanted to get the lowest rate possible because you were being greedy. And that's the thing. People just can't even realize it. And they're constantly looking to blame other people. And this is such a deterioration in society that people don't often talk about, because when people do this, it's obvious what comes next. They don't learn from any of their mistakes. And believe me, years ago, I used to do the exact same thing. I used to blame all my problems on other people, when in reality, I needed to take ownership of the problems myself so that I could learn and become a better person. But this isn't what people are doing in society anymore. They are avoiding their problems, blaming them on other people, and this is leading to just a decay of society that we haven't seen before, and it's happening on such a rapid scale. And I would argue that this is learned behavior from the politicians, the central planners, the bankers, and all the rest of it, because they get away with murder essentially, and it is frustrating. And then I'll read you this last one. The Bank of Canada and Government of Canada are actively working against each other. The government bringing in 1 million migrants per year, putting too much pressure on and killing our housing market, while Bank of Canada skyrockets interest rates. And you know what? I would kind of agree with that, actually. That's a good way of putting it, because they are essentially working against each other. And yeah, I do kind of agree with that person, that what they said there. If you look at the monetary aggregates right now and what's happening, these are absolutely tanking. And as far as the data goes back to all the way to 1996, we've never seen a decline this fast. M1, M2++, and all this. And you can go to the website. I'll put the links in the description. And then if you look at M2, as I've discussed before, it's starting to slow down now in Canada. And if you look at M2 in the United States, you can see that there is a decline that's happening with M2 in the United States as well. These are not good signs when you have a credit-based economy. You see, what people forget is they think the money supply is like printing cash, but it's actually printing credit. So that credit can be destroyed, and that is when you start to see what's happening here, which is a decline in your money supply, which can't happen in a credit-based Ponzi scheme economy, and that's what we have. The last time this did happen was actually when? Here you go. So you know, this is not a good sign. The 1930s was the Great Depression, and essentially you had the same thing happen during the 1920s, during the roaring 20s, with credit growth. It was the buy now, pay later. It was all these other things. I mean, go look at that time. It's a fascinating time in history, the roaring 20s, to go study. I personally love studying history. Right now I'm studying the Roman Empire, and I think it's just the parallels that you can draw between these economies that were thousands of years ago and now are just unbelievable, because it's human psychology. The human psychology has not changed since the Roman times. We still have the greed, we still have the fear, we still have all the other emotions that we experience, and people in power experience too. So it's very, very interesting. And then you can see what's happening with inflation right now. Inflation is coming down. Obviously, we know this is phony numbers, but by their standards, inflation is coming down. And inflation is at 3.4% right now, according to their numbers, according to the CPI, the CPI. But you have to remember, with rates now at 5%, you've got real rates. You've got actually positive real rates in the economy. So as inflation comes down, you've actually got the tightening increasing even further, because now you've got real interest rates. At least that's what the banks and everybody else thinks. I mean, you and I know in reality that's not the case, but it's worth noting. And then the PPI that is for the US, I think tomorrow is going to be interesting, but Canada producer prices are falling, but they're still high. Producer prices are essentially the inputs that go into all the products that you and I buy. So it's very important to watch this. So that remains elevated. So obviously, I think we'll continue to see inflation that is elevated, and we might even see inflation going up in the fall, because the base effects will wane out of the CPI. So it's going to be really interesting. We also had a report today from the US, which was about their inflation, which showed that it was actually coming down just a little bit more than expectations. It's going to be very, very interesting to see what happens going forward. You're going to hear a lot from all the central planners and politicians over the next couple of days, you know, all politicizing what's going on at the Bank of Canada front. But anyway, guys, I want to thank you so much for watching. If you've enjoyed this video, you might like this video here. You might also like that video there. I will see you